This is Bazaar Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Last day of the week. It's not Friday, it's Thursday, but tomorrow is a market holiday. So I guess people in the studio are going to be a little perked up overall in general. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surabhi and Mangalam. Guys, hi, morning.
Good morning. Good morning, Prashant. When you said it's not Friday, it's Thursday, for a second my heart sank. Then you reminded us that yes, tomorrow is a holiday, so I think the world's a good place today.
Well, good to have you here.
Well, the world's a good place. 3 days weekend, we have Mahashivratri, and the way the markets moved yesterday, I think everyone was just saying Har Har Mahadev. The way, Nifty was...
Not Har Har Nifty.
Har Har Bank Nifty.
It was more Har Nifty than Har Har Nifty. 250-point recovery from the lows. What a stellar move.
And absolutely. And, we'll actually begin there, as we always do, to quickly take you through what you need to know as we sort of start another session. So big recovery, right? 200 points from the lows on the Nifty is what we had. But over the last couple of days, the small cap and the broader markets have been losing momentum. And that continued. The small cap index was down about 2% or so. The mid cap index was down about 0.75%. And that's been the problem spot. Now, yesterday, of course, banks participated. Basically, large private banks, ex-HDFC Bank, right? Now, that's a very specific cohort of stocks that we're talking about. But that's what happened. PSUs did not participate. It was large private banks, ex-HDFC. And Bank Nifty, of course, saw a bit of a move. What's happening in the broader market, you might ask? It's a combination of things. It's, this messaging from SEBI, RBI, and it's largely messaging, but some action as well. Messaging from SEBI and action from RBI, which perhaps has dampened sentiment a little bit, because many are making it out to be to understand that regulators want things to cool off a little bit. I mean, it's just getting too hot. And they want to be careful and want people to be careful. I mean, that warning that came from SEBI, and when it was in a way, and we said this, right? It was unprecedented for the regulator to actually say the market is frothy. But that's what we heard from SEBI when they wrote to the Mutual Fund Association. So it's a combination of these things. March is, of course, also the end of the year. Last month, tax harvesting is a powerful factor. Usually there is some selling on account of that. Some were asking if there is some margin selling which has started, because mid-caps, small caps have corrected quite a bit. There is especially a relevant question to ask, because margin trading facility, the MTF facility, which pretty much all brokers offer, which is that you can, leverage 2x, 3x, 4x on stocks or cash as collateral. That book has actually grown exponentially over the last 1.5 odd years or so. I mean, the number I have is upwards of 50,000 crores. I spoke to a couple of big brokers. This was, of course, yesterday, late session. And they said, well, not yet. That was the response that I got, at least, and that's a good thing. Now, tomorrow, of course, is a market holiday, so keep that in mind as you put in trades and take positions, etc. And tomorrow in the evening, you also get the jobs data out of the US. So it could be market moving one way or the other. Overnight, US equities were higher. NASDAQ ended about 0.6% in the green. Yields continue to drop. We actually hit about 4.1 and then pulled back. We left off at about 4.11. Dollar index is around the 103.5 levels, which is weaker. I mean, it's getting weaker, and that's a great thing. Now, this is the second data point which points to a weaker labor market. This is the JOLTS job opening that fell to under 900,000. It was not as if it was a big miss. It was in line, but it did point to and was a reminder that tomorrow, tomorrow's US jobs data, the monthly big jobs number, the NFP, that perhaps could also be weaker. It could underwhelm, and that is important. I mean, if you want to watch for two data points, one is the job data tomorrow, and then, of course, next week when you get the CPI, the monthly CPI number. There was also, of course, the testimony of Fed Chair Powell to the Congress. He said, he basically said all kinds of things. Rate cuts are coming, but he said, well, he needs more confidence to cut. So it's neither here nor there. So it was nothing new. And I don't think the markets reacted in any big way to that. Oil prices just around $83 a barrel. It's moved up about 1%. So incrementally, we are higher. So just a few levels. Nifty, important resistance right where we left off now. So 22,500 and 22,538. Because we are at all-time highs, you basically have to work with extension levels. So once we take these out, I think we'll put more numbers on the board. We must not now break yesterday's low, which is 22,224. because the market bounced so powerfully from there. Bank Nifty targets all-time highs. Hopefully we'll get there. 48,636. We've had many false starts in the past, and support for the Nifty Bank comes in where the 40 exponential and the 20-day simple converge, which is around 46,450. I think the GIFT Nifty is indicating a higher start right into the resistance levels on the Nifty that I pointed out. So we'll see how the trade actually pans out. But remember, I mean, it's been a little volatile. Last 2 days were doji, indecisive kind of trade patterns is how you describe it. Broader markets are cooling off a little bit, and I think that could remain a little soft, little sideways after what we've seen very recently. Surabhi.
Hi, Prashant. Morning. It's interesting how all of us and the street at large has stopped talking about any troubled US bank now. That's not even a chatter point, but it's happening. It's true. So I just wanted to place that on the record.
Right.
Yesterday at New York Community Bank, I mean, the shares were going all over the place, down 40, 30, then up. And this is a lender that's now asked for a $1 billion lifeline. And a lot of its troubles come from the commercial real estate market in the US. So anyway, no one's talking about it, but important not to ignore some of these events when they happen. For us, it's about, a tale of two cities. It's a divergent market. That's what we're dealing with. And yesterday was a classic example of that. The recovery did take place even in the mid-caps and small caps. And at the end of the day, you still had green on the large cap screen and red on the mid-cap, small cap screen. Just to go back to the US and for the benefit of our viewers, I just want to place on record the exact comment that sparked a rally in bonds, that sparked a rally in the US dollar as well last night, what Prashant was alluding to. What did Jay Powell really say? Jay Powell is saying if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. So basically, Jerome Powell gave the market hope that rate cuts are coming this year itself, and that was enough to for people to sit up and take notice. The yield fell and the dollar rose. Back to our market action then. Yesterday was another day of strong institutional flows, both FIIs and DIIs. But I would take the FI number again with a slight pinch of salt because we had all those blocks. Remember, we had a Zomato block yesterday. Morgan Stanley was one of the key buyers in that block, so on and so forth. So these numbers are being skewed because of the large amount of block trades that are happening. But there's money coming in. That's the short point. Now, banks really have been the savior for the large cap part of the market, and that was something very, very interesting to note. Yesterday on the Nifty Bank, overall speaking, there was a dip in open interest, almost a 10.5% dip in open interest. So a lot of what we saw yesterday was a short covering move. The question is whether this short covering move now metamorphs into a real long trade, that big bank long trade that has been eluding the street since the start of the year. Everybody's waiting for it, but it's not come as of now. Will this whole NBFC saga with the Reserve Bank, will that prove to be the tipping point which gets the money rush back in favor of big banks? That's something I'll watch out for. Now, on mutual funds, Prashant, just to add to your point about AMFI and the regulators being in a bit of an overdrive, just want to remind viewers that 15th of March is the first day when we'll start getting those additional disclosures, the result of the stress tests that mutual funds are having to do now with respect to their mid-cap and small-cap portfolios. And what are these stress tests? Basically, they have to go out and tell in how many days can they liquidate 25% of the portfolio and then 50% of the portfolio. That gives an idea about the stress in the system. So that happens on the 15th of March. So we'll watch out for this. Just to put some numbers on the table in terms of the performance. This week so far, the Nifty is up about 0.5%. The Nifty Bank has been the star performer, up 1.5%. Mid-cap index is down about 0.5%. Look at the small cap space. It's down 3.7%. That's been the story of this week. And again, if you talk about the distance from the peak, then the Nifty is practically at the all-time high. The question is, can the Bank Nifty get there today itself? But look at the small cap index once again. It's down almost 7% from the peak. So is this correction, are we in the middle of it? Have we just started it? Is it getting over the mid-cap broader market correction? That's a question on my mind today.
That is a question, and you did speak about, the banks, etc. in the US having a problem. What we're not talking about also is the sort of consumption decline that we're seeing in the US. Commentary coming in from a lot of the retailers overnight. Victoria's Secret was down 25%.
Well, that's
and then we had,
serious now.
Apple and Victoria's Secret, hallmarks of the US consumption, so to say. But be that as it may, I was just looking at some of the trade, moves that we had yesterday. And what's interesting is that it is the return of the large caps. If you look at the moves this month itself, you have a bunch of big movers in the form of the Nifty Bank. When was the last time we had the Nifty Bank outperform the Nifty by a factor of 2? The mid-cap index just about 1% higher. The small-cap index is down 2.5% this month. That takes the Nifty Bank just about 1.5% away from a record high. So one good session away for the Nifty Bank to hit that record high mark itself. And what happens after that? Importantly, the FIs had been selling our markets, but yesterday they were forced to cover a lot of their short positions. Yesterday was the Nifty Bank weekly options expiry. The FIs bought 1,400 crores in index futures, and nearly all of that was directed towards the Nifty Bank itself. What did they do? They added about 10,000 long contracts, and they covered close to around 8,000 short contracts. The short contracts were covered on the Nifty Bank. What tells you that? If you look at the open interest change, the Nifty open interest was up 9%. The Nifty Bank open interest was down 10%, telling you that yesterday's move was short covering. Does that continue today or not? It is Nifty weekly options expiry. The short contracts are down from 65,000 to 46,000. The long exposure for the FIs is up from 35% to 40%, and the short contracts or short exposure has come down as well. The Nifty weekly options expiry today, what are the indicators telling you? On the way up, 22,500 call has seen a fair amount of writing, and on the way down, 22,400 put has seen a fair amount of writing as well. So 22,500 call has a premium of 70 rupees, 22,400 put has a premium of 30 rupees. Those who are writing both of them are playing for a premium of 100 rupees on either side. So that means that the options data suggests a range for the Nifty between 22,300 and 22,600 itself. While that corresponds with yesterday's low and high on the Nifty, the important part is that the Nifty, GIFT Nifty is indicating a positive start to the tune of 50 points. So should you chase this gap up or not is something that we'll get an answer to in just the first hour of trade.
Absolutely. And I think, interestingly put, Mangalam, thanks very much for that as you come back and join us here on the table.